We all know that BD and M&A is a very important part for a lot of our companies. One of the common questions when we are facing a biotech company, should they start thinking about BD partnerships?
I think on that one, you should start thinking about it from day one. Because I always say, as an executive, whether you're a CEO or a CBO, you need to create options for your company and create optionality. The one thing you control, of course, is moving forward yourself. How you do that, is to secure financing, but how you get well financed really depends on the market, on the situation, on what you have. So I think having BD in mind from day one is good, but to me, it's always means to an end. It's not an end. So if you're there and you just want to do a deal, it's often very difficult. The advice I always give as a BD guy is, I don't sell anything. You can buy anything from me. Anything is for sale, but I don't sell anything. And I think that's, to me, the advice. Start early. Try to kind of keep your own fate in your hands so that, you're not forced to sell, because by definition, then you're in a losing position. But try to create options. And if you have the options, if you have the best cards, you get the best deal.
I would say that you have to think about what we call exit windows when you come up with your business plan, right? So indeed, if you build a biotech, you have to have a plan, you have to have a business plan, and there will be natural points where you have data packages, information that could be important and relevant for partners. Typically these days they are around very early. There are some partners who are interested in platform deals. That's something you can consider. There is a second window typically, and that's primarily for very promising, innovative, new approaches, which is before clinical. And then today, what is the trend, particularly for big pharma, is that they want to see some clinical data, which typically means clinical validation. Inherently, the value that you create with these three exit points is exponential. So that's something you have to consider and to match with the risk that you want to take. And to Luc's point, the optionalities that you have, right? So my background is primarily in clinical research. My passion is to bring molecules to clinical validation. So personally, I think the most interesting point is once you have some clinical data, validates that the concept is really relevant for men. And just to put this into some practicality, actually at the moment, the deal that I'm most proud of and is most successful is an ophthalmology company called iBio. And if you put this into these 3 points, the candidate, before clinical, and after clinical validation, right? So the valuation at the time point when we had the molecule was around 20 million. The valuation before we went into clinics was about 100 million. And the valuation after the first clinical trial was 3 billion, right? So, of course, it could have gone terribly wrong in between, but there is a reward for the courageous, right?
You raise a very good point. At different stages of the molecule, there's different valuation. When did you get started to talk to partners? How do you know when to get started? Any advice for young biotech CEOs trying to get their first deal?
As a young company, I always compare it to selling vacuum cleaners door to door. You really got to believe in your product, even if it hasn't really worked yet, but you got to be convinced. And you got to knock on a lot of doors and you got to speak to a lot of people. It's a constant marketing effort and you build your networks. And so in the beginning, that's tough and you get a lot of no's and you're ignored and you just are persistent, you keep going. But over time, you develop relationships. And also what I've learned is even the young junior BD guy 25 years ago, when I was starting on the sell side, he was sitting on the buy side, is now head of M&A at another company. So today, these relationships really pay off. So my advice is be out there. nobody is helped by just you sitting quiet and not going out there. So there are stories like, I think, iBio, which are perfect. It's an experienced team, the band comes together. But the first time they did it, I'm quite sure they had to do exactly what I was talking about. And as always, the first time is the hardest. The first term sheet for your first financing is the most, difficult one to ever get. If you've done it a few times, like I said, it's a people business. People trust people. They believe if you've done it before, you can do it again. But don't forget, everybody has to be a first-time CEO. It's the same if I talk to my colleague VCs. Yes, but we want a very experienced CEO, or this guy or this girl has never done it before. That's true. But nobody gets born as a second-time CEO. That just doesn't happen. So I would just say, be out there, build your network, talk to a lot of people. And I think the other thing I was thinking about just recently before I forget is sometimes doing a deal also depends on if you can hold on to it to build value. That's great, because the value goes up exponentially. Every deal is different. Every situation is different. So there's no right or wrong on that answer. But you have to look at, can I generate more value myself? Do I have a team that really wants to do this, or do I have a team of people who want to flip it? What is the best way, the shortest way, the most, you never know for sure. As Andreas also said, it can go terribly wrong in between the different phases. And the likelihood that it goes wrong, in all honesty, is higher than that it goes right. We have to be honest on that. Translation is difficult, biology is difficult. So you have to take all of that into the equation and then make a decision, and then hopefully come to a win-win deal.
You brought up a number of points. Maybe I'll start out with the part related to the team. So to get a successful M&A and BD deals, how important is the CEO hire a best CBO, or let's go find some investment bankers to help us?
There's a lot of answers to that question. And I think I'll just use the Prosenza story company. I was the CBO with a great CEO. But the CEO was really, out there and telling the story. We were a public company, and he was out there, I'm going to build the next genzyme. I've learned from Henry Termeer. I know how to do it. He was a commercial guy. We're in phase 3. We're going to do it. And I was the crazy BD guy next to him. We say, yeah, this guy, I'll sell it. But that was a nice play toward the world. And we knew that from each other. It was like, we had actually almost played double tack on it. Hard to get. The CEO is going to build it, and really that's real. On the other hand, there is an openness to talk to this BD guy. So maybe if we're truly interested and we make a great bid, we can still get it. Because there's always a balance. Like if you're too hard to get, nobody is going to take the risk to be disappointed. So this double tack play between a good CEO and a good CBO, I think, was actually something that worked well. So I think both are important in these discussions. I think as a CEO, you're also very vulnerable. If you're the CEO of the company and you're out there only trying to sell to pharma, then it's like, don't you believe in your own product? Can't you raise money? If I'm the BD guy, that's my job. I have to try to kind of get a deal done. And so I think this interaction is quite important, to trust each other and really know and be very open and transparent, because at the right time, you really have to bring it together. And also, as a team, you've got to be aligned, because also pharma will feel that if they, if I'm the BD guy and at a certain moment the CEO, keeps saying no, 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 they're also going to say, stop wasting my time. So you just have to find the right balance.
I think we are at the interesting topic, which is probably particularly relevant for Singapore, right? Because let's say the message is the following. So science doesn't sell by itself, right? So if you are in that business and think about finding partners, the science needs by definition to be strong. The debate about M&A and BD is largely a debate about people and social skills, negotiation skills, strategy. It's kind of a soft science. And like Luke says, there is not a standard recipe. The only thing which is relevant is the team, the dynamics in the team. And that's also why, and Luke can comment, as an investor, probably 60% of your investment is the team and 40% is the science, right? So basically, a poor team can waste fantastic innovation, and a great team can make mediocre innovation a great success. If you can have a first-time CEO, but then somewhere in the team you need to have some deep senior expertise. It's the way that the group comes together, and the way also how people can learn in an enterprise, and then are next time even more successful than in the first round. Right? This is a whole cycle there.
And I think building on that, it's also very important to realize only the team can do it. It's very hard for somebody else to kind of make a deal on your behalf. I've seen this so many times that people then refer to consultants or bankers, and they count on the banker to actually do it for them. I think if I learned one thing in the different M&A deals is a bank can be a great facilitator. They can help you to maximize the deal, but they never get a deal done. So if you've not had real interest, if there's not yet, interested parties with a term sheet, with a concrete offer on the table, it doesn't really help to get a banker involved, in my experience. Because if they start calling people and, the other side still has to say, yeah, but who is that company? It seldom works. What does work is you have interested parties around the table and you want to kind of keep them honest and to a good timeline and kind of really show that it's real, that you have serious interest. Then a banker is a fantastic facilitator who can help you kind of, get a little bit more value out of the deal because parties feel it's for real and that you're not playing poker or bluffing or anything. That's good. But I've seen too many kind of companies where the CEO or somebody says, I have this great thing, I want to do a deal, let's hire a banker. Well, trust me, recipe for disaster. So you can only count on yourself, you can only count on the team. You have to kind of bring the people around the table, and then they can help you optimize the deal.
So maybe we turn to another stakeholder that's essential for the success of any BD or M&A is the buyer, pharma. Or biotech. What are the common pitfalls that you saw when they try to engage the pharma?
I have the privilege because I was in big pharma and involved in pharma, not in the negotiating, but in the diligence of the assets. Right? My group did the R&D diligence for Roche for a couple of years. So my advice here, having seen the interaction from both sides, is you need to find a champion in a company, right? And it might be with my bias because it was in R&D. Ultimately, the people who are really gonna go to push a deal over the line and have to champion it are the R&D guys, right? Essentially, if R&D is not convinced, typically a deal is not happening. You need to think with whom you're gonna go to talk, right? I see many biotech companies say, oh, we talked to AstraZeneca, they're not interested. And they say, with whom did you talk, right? So you need to find champions, you need to build the relationships. I'm fully with Luc on that. And then actually, while you move the dialogue, also reach a certain seniority you can talk to. Right. Let me explain why I'm saying that and giving you some insights from the pharma perspective. So there was a couple of years I was in charge of the cardiovascular metabolism franchise. So we had a strategy about what we wanted to do, and the BD guys, they got a brief. So these guys, they go to the conferences with a shopping list, right? So as a biotech, you need to know who is shopping for what, but these very often more junior people that you meet at the conferences, they would never ever propose something outside of that shopping list. So it is almost an uphill battle if you try to convince them about something which is not on their shopping list, right? So first of all, you need to know who is looking for what. And if you want to have an entry into a company, and I hate to say again, iBio as an example, Merck does not have an ophthalmology department before they bought iBio. So there was no point to talk to any Merck partnering person because we were not on their shopping list. That's why we called the CEO directly, right? And then you got traction, right? So you need to think how you want to approach the right people and get champions and contacts. And what I would postulate not only on the BD side, but also on the R&D side to get the right momentum.
I can only agree that the R&D part is very important. Sometimes, yes, you can go to the BD angle, but then you got to be realistic as well. I've seen this also too many times where people come back and like, we had great JP Morgan, we had a great Jefferies, we had a great Bio Europe. Everybody said they were interested. And I'm like, yeah, sure. If I'm a BD guy, I'm always interested in everything, and then I'll digest it afterwards. Why would I tell you up front I'm not interested and I wouldn't take the meeting? So I think that's one thing to consider. R&D is key, and until you get to a certain seniority level, you're not in serious discussions. Once you're in serious discussions, my advice would be very honest, be very open, present it as it is. Don't try to answer things or try to kind of make things look more beautiful than they are. I think they're very experienced people, as Andreas was on the other side. So if you try to BS them, it's going to fire back. So it's better to say what you know, be very convinced about what you know, and then also be very honest about what still needs to happen. They know if they kind of deal with a biotech company, not everything is going to be perfect. And also don't be upset. You'll always have people on the other side who initially kind of, in their specific area of expertise will be a bit negative because it's not up to their standards. But there's always a champion who oversees all of that. So I think be direct. Don't be discouraged if you get some negative feedback. It doesn't always mean the deal is that. And I think that's the thing. I've seen people trying to sugarcoat things, and I think that's the worst things you can do. So it's better to be honest, better to be upfront. And I think also if you're very confident in your product, the question I often get, and I had is, are you happy if you're in very serious discussions, if you're already term sheet, you are talking about a magnitude of a deal that you're willing to accept? Are you willing to do like an MTA? Because I've seen that recently in pharma, and Andreas, happy to hear if you share my experience there, is that sometimes now before they buy, they want to test. And so they want to make sure that the data you've generated are real. And so they want to run it, at their own. And I'm like, if you're confident in your own data, if you know how they've been generated, if you double tested it yourself, why not? Best case, it goes well and actually the value goes up. Worst case, if it's like shaky, you can always see and you have the value of your data, and maybe then, it's not the right partner if they really want to question it. So I've never seen a real downside to that. And I think I've seen too many boards where people are really scared and we don't do that and blah, 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 and then sometimes a deal doesn't get done. I think this is to me also key. Be direct, be transparent, have confidence in your program, in your own product, and let them test it before they buy it.
I think I will end up with just one question because nobody talk about the value of the deal. How should a company think about, let's say it's a licensing deal, upfront versus milestones versus the royalties? Where do you balance the value as a young company?
Luc is probably more the business guy. I'm still the R&D guy, but I think what you try to do is you get as much upfront as possible.
So money now is more important.
Yeah. So you push for the upfront, right?
Yeah, I fully agree. It's the only thing, the cash in hand is what you get because there's the development risk. So bio dollars are bio dollars, and you don't know if you're going to get there. So it's easy to count yourself rich, but you still got to get there. And then secondly, you also hand over, the project to somebody else in most cases. So, and what can also happen, not invented here, what is hot today in pharma and a priority, 2 years from now, different CSO, different CEO, different strategic vision. And I've seen this multiple times before, I did a partnership with GSK. They were building a big rare disease unit. So GSK goes into rare diseases. 3 years down the road, GSK goes out rare diseases. They sell off every asset. 2 years later, they're back. And so, but it can be very devastating to your project to kind of go through that downturn when it's no longer in vogue at the company. So it can still go well, and ultimately you should hope that if the data are good, the company will remain focused and will deliver the asset, but you have no control over it anymore. So from that perspective, I fully agree. Everything you can get now is guaranteed, is assured, and that's the real value of your deal. All the rest is very nice for the press release, but be realistic.
With that, I want to thank Andreas, Luc, for sharing a lot of the insights about their experience in BD M&A. And we can say that this is really for creating optionality for the biotech companies. And ultimately, also what we also learned, cash is king in order to drive the growth of biotech. Let's put our hands together and thank Andreas, Luc, and Droia.